Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick. Hope you all enjoyed the long weekend, had a good holiday, whatever you were celebrating. On today's show, what do we have here? We have earnings, a couple earnings, Halliburton and KMB. Whirlpool's after the bell. We're going to talk about the weekend headlines in Tesla. We're going to digest the first day of trading in Zoom and Pinterest, and we'll take your questions from our chat. Our guest today at 8:35 will be joined by Andrew Horowitz, president and founder of Horowitz and Company. Joel, how was your weekend and how are we doing this morning?
Good long weekend, fresh here, relaxed, ready to go. We got some nice market action here. S&P's nice range, 29.1575 overnight. That was early on Sunday. That didn't hold. Pre-market low, 29.01, trying to get away from that level. Love to see a pop up near the close. That closed 29.10. Also, a couple other closes in that area, so that's going to be your major resistance. Coming back on the downside until we take out the low from last week at 90.75. I think we're still poised to test those all-time highs, but ranges contracting tighter and tighter. Consolidation that always leads to a good move. Crude. Big crude news, U.S. ending Iranian sanctions, 65.47. That's up $1.41. We had talked about all those daily highs at 64.70. Well, they busted through overnight. The high 65.99, current low, that was right off the 6 p.m. open on Sunday at 64.05. You have crude, as I said, at a multi-year high. Gold up 470 at 1280.70. Silver trying to get back above $15 at 15 even, up 4.5 cents. And don't look now, but the Bitcoin futures are up $25 at 53.20, holding that $5,000 area. Got a lot of news to cover. Triple D, anything interesting on Thursday night?
There was some movement there Thursday night. It's hard to remember because you're going back so many days ago, but I have a little trusty sheet that I write stuff down on, so that refreshes my memory. A couple headlines there. You know what was interesting? Go to Fastenal, stock split. When's the last time we saw a stock do a stock split? Good old-fashioned stock split for Fastenal, they announced on Thursday night, FAST. And the stock was getting bid up after hours fairly significantly. I saw some trades go in the 73 handle, which would be up 2 points. I was way overdone, but they don't do that anymore. You just don't see a lot of stock splits.
They did it right away? I mean, because I see it now.
What do you mean they did it right away? No.
When did they announce
the stock splits?
Okay.
It's 71.20 this morning. It hasn't split.
Oh, okay. Wow, that's not really that high of a price
to so they bring it back down, but they announced it. So 71, it was trading up in the 73 handle there after hours. It's 71.90 here this morning. I think people, maybe got excited after hours. I don't think it's going for the 72, 73 handle, but I mean, the stock has been hot as hell. You just look at it straight up. So, and, people like the stock splits. They bring the prices. They think they get twice as many shares. I mean, really, when you think about it, theoretically, you're not getting any more value from it at all. Warren Buffett has always said why he doesn't split, because there's costs involved to the company to do that. You're splitting all the shares. You got, obviously some accounting expenses and everything to figure all that stuff out. And there's no real value, but people like getting twice as many shares. They think they're getting something. I can think, back in the days, I'd have traders come up to me, oh, is it going to split? Is it going to split? And, really there's no real value there to a split, but people always viewed it as very positive. So, and interesting, you just don't see it much anymore. So I saw the headlines like, wow, when is the last time we saw a stock split? And I was like, I can't remember.
Especially
like on a big company or anything. You used to see it all the time, and you just don't see it anymore. I mean, we had Google, obviously, the split into 2 different stocks, but when is the last time you saw a company? And I mean, maybe we've been going sideways for a while on the overall market, but I mean, you just don't see stock splits anymore.
And
Chad,
it's
help me out here. I can't remember.
Yeah, I can't remember either. And usually you see it when stocks get in, over 100, 150, 200, $300 to make it a little bit.
And they let them
more.
do it now. I mean, you think about how many stocks, here you got Boeing, it's $375. They never have back in the day because the stock would get over $100 and they'd split it to bring back to 50. They always used to do it. Like when we started trading and when you started trading back in the 19th century, Joel.
Oh, yeah. 1899. That was one hell of a year. They were worried about not Y2K. It was Y1900 is really what they were worried about.
I was saying Apple, and he's right. Apple did the 7-for-1. And that was a lot of years ago, though. Like, when was that? That had to be 3 years ago at least. Has there not been a big one since Apple?
That was more. That was like 4 or 5 years ago, I feel like.
It was a long time ago. I remember it because I was actually short the stock overnight. They announced that. Remember I had a. I had some calls written on it or something. I had something.
No, you wrote a straddle.
Oh, I wrote a straddle. I was like, I never write a straddle again. It was the worst straddle I ever wrote. So I think I got $25 for it. And the stock was like 500. And then they announced good revenue and good this and good that. And then they announced a 7-for-1 split. And I was like, I'm crawling under my desk. I was like, this is not good news. It opened up like 70 points the next day. I was like, that's the worst $25 I ever got.
I remember that. That was a big. I remember that one. That was a while ago.
Right. She says, too many stocks are expensive now. I like trading lower price stocks too. I want to see more stock splits. Let's, petition to start having more companies split the stock like Fastenal. I want more stock splits too in Texas, Linda.
April 23rd, 2014. That was the Apple 7-for-1.
That's the last big one I can think of. And we used to see these all the time. That's 5 years ago.
Wow. The Google
more
one.
Stock splits needed. Good job, Fastenal. Maybe you'll start a trend.
Yeah, the Google one. I mean, they split it into like $2,000. Yeah, what good does that do? I mean, maybe it was two $500 stocks at the time, but
like $1,200. I own Google and I still own it from it, but I mean, it split up, and then one had the voting rights, and one's not going to have the voting rights, and I don't know. It's just all confusing. That was confusing.
I just thought
changed the name to Alphabet, and we're like, what's going on?
Alphabet soup. You know what? Also, I read over the weekend, and I don't know if it was in Barron's or not, but Google has shuttered 160 different ventures and 100 different companies that they've started up. That over the years, they've tried all these different innovative things, and they talked about them. Remember when they had those glasses? Remember Google Glasses? Remember that was a while ago?
They still have that going, don't they?
Yeah. Does anybody? I mean,
I don't know if it worked out, but.
Anyways, long digression here to talk about Fastenal, and someone's painting a tape here. These odd lots that traded here up at 73, 72, 70, 15 shares, 27 shares, 100 shares.
I just think that's retail traders that are all excited and they're just like, I got to buy 20 shares. I don't think that's anything nefarious. I think that's just retail traders that are like, they buy 10 shares, they buy 20 shares. Stock split, I'm going to buy it in the after hours. And that's why when it's trading up in the 73 handle on the stock split news, it was probably a little bit overdone.
Right. I just keep an eye on the range from Friday or Thursday. That would be 71.11 was the high. The close was right there, 71.08. So let's see if it goes red on the session. You got a ways down to the low from Thursday, but still using the parameters, just not enough volume to give a lot of credence to the pre-market action.
All right, let's go to the big headline here over the weekend. Everybody's talking about this Tesla explosion. I have not seen the video. I tried to load it up there just right before the show started, but then we got sidetracked and I did not see it. So car just explodes? Like, well, tell me the details. Mr. Israel, what's the details on this explosion?
Short 10-second video posted on social media of a car just chilling in a parking garage, and then smoke starts to come out of the engine, and then the engine kind of bursts into flames.
So just the engine part, that wasn't like the car itself, just the engine caught fire type of deal, or was there an actual explosion? Because I see my headline, Tesla explodes, so I envision a car just, boom, like gone. Well, it wasn't like that then.
No, it exploded.
I mean, it did.
I mean,
like car pieces flying.
But no, but it burst into flames. Like there was smoke and then it burst into flames. So yeah, it didn't go flying, if that's what you're wondering. But.
Yeah, well, an explosion, I think of what, don't you, Joe? When you hear explosion, I picture car parts flying around.
No, that's not what happened.
So, okay. So, and it was basically caught fire, engine caught fire. All right,
Right.
so that's negative, obviously, but there was more negative news. They always bring the stuff out on the Thursday night when everybody's not paying attention. Board members too, we're losing a few.
Oh yeah, you're going back a few days on me now, but
Thursday night. Yeah.
They 1, 2, 3, 4 board members are not seeking re-election.
Okay, so we're losing a few more board members. We got a car explodes over the weekend. We got a nasty downgrade here from Evercore. I have the note in front of me. So Evercore analyst Arndt Ellinghorst, sorry if I mispronounced your name, downgrades the recommendation on Tesla to underperform from in line. Price target is lowered to 240 from 330. So that's a pretty nasty one. You know what's interesting? I was just looking at the ratings here too. Guess how many sell ratings are on Tesla now?
5.
Guess how many buy ratings are on Tesla, and guess how many sell ratings are on Tesla?
I would say
guess 2.
I'd say 3 buys. Oh, there's got to be more. That's right. Yeah. 10 buys and 5 sells.
That's actually not a bad guess, but I would think on Tesla there'd be like a lot more coverage. There's quite a few analysts covering it. So 13 analysts have a buy, 9 have a hold, and now 15 have a sell. There are more sell ratings than buy ratings on Tesla. The street has so negative on this stock. It's why it can't go down. Everybody is just bearish. You see this at Tesla explodes. You expect, from my Twitter feed, I expected the stock, like it sounded like the stock was going to explode too to the downside. It's down $4. I mean, they get bad news that happens and it just doesn't want to go down. It keeps clawing its way back up. How many bad headlines do we need on this stock to knock it down? It is just resilient. I don't know why that is, but I'm still sticking with that partial position until we start, taking out lows and making new lows on the move, because the stock just seemingly can't go down on bad news. I mean, maybe today you get a downgrade. It's a pretty serious downgrade, knocking the price target from 330 to 240. But I mean, down $4.91. Car explodes, we lose 4 directors, gets downgraded to sell at Evercore. I would think it would be down a lot more than $4, wouldn't you?
The initial reaction took it down to 265.01, and you're $3.50 above that. Quiet range on Friday, so we'll use Friday's low as potential resistance, 269.75. And at 265.01 low, that was the initial drop. Let's see where we've got. I think we've been a little bit lower than that. 66.11 was the low on the 5th. That's not lower than the low of the low of the recent downturn was 54.46. I see another low at 64.43. So pretty wide area, but as you mentioned, a lot of shorts in here. You get the bad news, and they come in and cover. And what else? They got something else going on today, right, Spencer? That probably make the shorts a little nervous. Autonomy Day or something like that. Presentations.
That's tomorrow. Tomorrow's
Tomorrow.
Their Autonomy Investor Day. So they're going to be presenting their plan for their future of self-driving cars, what technology they'll be using, their roadmap, et cetera, et cetera. That'll be tomorrow at 11. It starts at 11 Pacific on Tuesday.
Quote the Raven, and he's kind of a fun fellow. We've had him on the show a few times there. He's actually, I believe he's going to be out there in New York with us when we do our trade show there in June. Just summing up Elon Musk's weekend in review. 4 Tesla board members leaving. Gets a restraining order on a short seller, which I don't know the story behind that. SpaceX Crew Dragon thing explodes. Tesla parked in China also explodes. And then you can also add the Evercore downgrade to sell. Stock down $4. A lot of bad news. Stock down $4. It's like unbelievable. It just does not go down. I wonder if just everybody's just too negative. And I mean, my feed is just littered. Like there has got to be 3-to-1 Tesla haters versus the one person that likes it. So Jason Raznick, you need to tweet more about Tesla, because we need to balance this out a little bit, because I tell you, there's so much Tesla hate out there right now that you would think the stock would be at $200, but still resilient. So I kind of just reiterating that point. I can't believe it's only down $4.
But it almost seems like it's like the law of like overcrowding. Like there's either if there's 20 bad headlines, then are there any bad headlines? Because if there's so much, then it all just sort of drowns out and gets lost in the mess. And then like we notice like a bad headline on Apple there are so few and far between that we note them and we remember them.
Yeah.
But Tesla has so many that
you just don't even notice
we don't
them
even
anymore.
we don't even
Oh,
notice
Tesla
it
car
anymore.
exploded.
We don't even notice it anymore.
That's Tesla car
doesn't
exploded.
matter.
Okay.
Yeah, it doesn't matter.
Well, it got a lot of press. The explosion in the car did get a lot of press. I gotta go watch the video, but I think you're right. I think there's just we see so much negative stuff about it that the market just ignores it there too. It's a good point.
All right, let's do a few earnings here, and boy, a stock that was heading lower in the earnings and then just got killed. ISRG. What did they report Thursday after the bell? I saw some fireworks.
Yep.
In Intuitive Surgical. ISRG.
Yep. Thursday after the bell, Q1 EPS $2.61 versus a $2.70 estimate. Sales of $974 million versus $973 million. So an EPS miss and a sales beat in the first quarter. For them, they also reported that sales of a specific drug were up 27% on a year-over-year basis, but the guidance they gave was light. They gave lower than expected EPS guidance for the first quarter.
Stock down $30. So jump in here, Joel. $36 here now. It's a serious hit for the stock. The stock was obviously weak into the number last 2 days. Killed going into, from 580 down to 528. Now anybody who is thinking, okay, well, it's due to bounce and, any type of okay report there, it's going to bounce, are getting really disappointed here this morning because we're down another $36. The stock's lost over 100 points.
Yeah.
Free trading
quickly.
side.
Yeah. I don't know. It looks like you got maybe a very patient short covering out here. You hit 486, and that was back on the Thursday after hours. And since then, they've just been a patient buyer here at 486. Traded into 490 handles, so $7 off that. It's one of those situations where the longer it takes to get down to that pre-market low and take it out, the more you might have a little bit of a drift higher. On the daily charts, let's see if we got any confirmation here. Now that we're through 500 on one daily low is certainly nothing to hang your hat on here. Let's see, 485.59. How's this, man? This is a gap fill at 485.59. I think that probably was from earnings back in January. The close on that day, 482.99. If you're really looking for some blood on the streets, your January 8th low was 471.05. The way I feel right now, I just don't think it's going to get there. I think that pre-market low may be holding up.
We had some earnings today too, so let's hit those while we're at it. Halliburton reported this morning. We'll do them, and then we'll do the other one. Halliburton Q1 EPS 23 cents, beat by a penny. Sales of 5.73 versus 5.52 billion dollars. So a beat on the top and the bottom line in the Q1 for Halliburton.
These are all back in favor. Oil stocks, not just that oil is back in favor, but that merger. Yeah, you got to think helps a lot of these stocks too. But I'm talking the Anadarko Petroleum merger. It makes everybody think, oh, there's some value here. So you get a big hit there to Schlumberger. You get a big hit. Well, and obviously, you get a big hit. Schlumberger had the disappointment, but and Halliburton goes down on that. They buy these things right back up. I think there's some underneath demand here just in the oil services stocks here. Since we've had that merger and people may be speculating that there could be another deal. Like you think about, in the speculation, Kramer did a piece on this a few nights ago on his Mad Money show, and he gave like 4 names that he thought might get taken out. Apache was at the number 1 on the list, APA, which, I think it makes a good case there too. I always traded those two stocks together, Anadarko Petroleum and Apache. So if there is other people, potential suitors, and we know OXY got left in the dust not getting Anadarko when they were trying to be a bidder along with Chevron, they might be sniffing around looking for somebody else. So they're going after a Slumber. Those are big. But if you think like the Apache, the names that Kramer gave were interesting. Apache, Conco Resources, which was CXO. He also gave Pioneer, which is PXD. And those stocks have been going straight up since the merger. So, oil stocks, oil's held up well. Now you get oil helping out. But these stocks already have some, underneath demand just from people speculating that there could be more consolidation in the space.
It's in an interesting area. You got a nice pop up here off the number 32.50 is your pre-market high. You also had some other daily highs in that area back for the year. The yearly high comes in at 32. It looks like 32.35. So if you can clear that pre-market high, that 35.50 area, things open up to $33, but you're not exactly getting a running start. I mean, you're already up $1.14. So if it holds the gains off the open, sneaks through the 32.50 area, I'll be looking 33 to be resistance. On a pullback, you found a buyer here at under $32. 31.88 has been your morning after the earnings has been the low at 31.88, and then you get into yesterday's range. But pretty big move for Halliburton. Let's see if the buyers could take it up over 32.50.
Spinner also saying Parsi Energy was another one. There was 4 stocks, and that was the other one. Thanks, Spinner. I couldn't remember it. And it's been straight up there too, PE. So, and it's been straight up since the merger as well. So Halliburton slumbers there may be reaching a little bit, but they're still beaten down in a sector that is seeing some consolidation. So you never know. I mean, you look at this Halliburton chart, Joel, like longer term. I know you just gave some short-term numbers.
Horrible.
It's been horrible, but there's some value here. So you think about it, it's got a 2.2% dividend. They make some money. Schlumberger too, 4.3% dividend. Schlumberger, been a horrible chart. Had a rough day, on Thursday off of, and it was their report, wasn't it? I'm trying to remember back to Thursday, but I believe, I've got to go back to my old sheets, but I believe it was a report, wasn't it, Spencer? On Thursday for Schlumberger, SLB?
Yeah, yes, it was. They reported last week.
I'm almost a buyer of the Schlumberger dip. You're seeing it this morning off the Halliburton numbers, but I just think, the space is a little bit back in favor. And things could change in a hurry. But if I was a short-term trader, those are dips that I actually would look to maybe be buying. And on all those stocks that listed, because I think I agree with Kramer sometimes. I don't agree with him sometimes, but I do agree with him in this case. I think there's going to be some more consolidation in the space as well. When you have Occidental, they got left in the dust. They might look to buy somebody else, or maybe it's going to be, other, players that come in that we don't even think about. But some of these oil stocks, or some of these oil stocks are fairly cheap.
If you want to go to a monthly chart here in the Halliburton, it looks itchy here at 32.50. Actually, your February high was 32.71, but the rally was capped at 32.37 in January. So far, 32.30 in this month here. So if you're trying to pick a bottom here and you want to swing for the home run, 26.01. That's a ways away. That was your January low. I don't think we're going back there anytime soon. But if you want to risk $6 on a swing trade down to 26, well, actually 24.70 was the low in December. So you're quite a bit off that. But if you're trying to buy on momentum on a monthly chart, looks like you got a breakout here over 32.50. We'll see how it trades today.
There's some serious in the chat's talking a little bit about a few drugs. Ed Parker's mentioning Amgen. There is so many drug stocks that have just been killed in the last 3 days. Like we talked about the Intuitive Surgical chart, and that's a little bit to do with just anything to do with, it seems like healthcare right now is just been getting the beats. And we talked about Merck on Thursday. Merck went down again on Thursday, like we talked Thursday morning show. It's down again on Thursday, another $2. Like that's an incredible move for Merck from 82 to 72. But you look at all the stocks in the sector, and they're all just, you can go to the IBB, and maybe it's a quicker way to look at it, the XLV. But every drug stocks chart is just ugly right now. So I'm not sure what else is happening there. It's obvious rotation. But this morning here, we've got some news on Lilly and Pfizer. They had drug news that came out Thursday night. The one drug, and I don't remember which one it was, but it hit 2 out of 3 endpoints. They'll focus on the one that missed, because right now these things are out of favor. And Pfizer and Lilly are both trading down here again this morning on that drug news. And this Lilly chart too. Here's a stock that went up for 3 months. It's given 2/3 of the gains back in a little over a week. 125 down to 113. These are incredible moves for big pharma.
And trading down again here. Rumblings out of Washington too aren't helping these stocks with caps on prescription drug prices. So still very, very muddled. The news coming out of Washington, what's going to happen with healthcare. But boy, these stocks had some tremendous runs. I look at so many green candles here in Lilly. Now you get a pullback. maybe wait for at least a pair of lows or, triple bottom or something to lean on. Bad day, though, for Lilly. Went from 125. Now you are under 115, down to $1.45. Let's see if I can find. I see 3 lows. Let's call it like one. Let's just call it 111.50. I see 3 lows from 111.10 to 112.05. Split that. That's $2 away here. That's short term. But, if you still want to ring the register from the beginning of the year, you're still sitting nicely in the green. The stock ended the year. Well, not so much the year, 115.72. So a lot of people back at scratch here in Lilly and under pressure this morning. Haven't looked at Pfizer in a while. Let's take a look at.
That's a big move.
Yeah, that's a
4
huge
days.
move. Yeah,
$43 6 days ago, 6 trading days ago. 39. Pfizer losing 10% on no news in a little over a week and a half. That's an incredible move for that's the biggest move Pfizer's probably had on no news in years. I mean, they're hitting these stocks right now. Relentless.
Yeah, and the monthly support in Pfizer, you did take out the August low at $39.49. Your next monthly support doesn't come into $36. That was your July low, but definitely sellers here and just selling these stocks and buying financials, buying low PE stocks.
These are low PE stocks too. So this is its own story because, some of these, pharma stocks, some of them are higher, but some of them are fairly low PE too. When you start getting into some of even the bigger biotechs, the PEs on like a Gilead, was sitting around like, in the single digits, and it's not immune to this at all either. So we've been talking about rotation in the low PE stocks, but they are not participating in this rotation. Like the banks have held up very well. We know that they're low PE too. Look at the moves really since obviously the dips even bought on Goldman Sachs. We got under 200, immediately bought. So people want to own the banks right now, but they don't want nothing to do with anything healthcare. It seems like. Although Barron's was giving some love, you said, to some of the health insurers here over the weekend.
Yeah, they just don't see the Medicare for all being a viable policy, and I think I have to agree with them on that. They mentioned all the big ones. They mentioned Anthem, which is trading in the green. Yeah. They mentioned UNH. That's trading in the green after a decent earnings report, but the comments from the CEO shook things up. Who else do you got in there? You got Anthem, you got UNH.
CI.
CI, yep.
Cardinal
who
Health?
did the big merger with Aetna? Was that
CVS?
Yeah, CVS. That got some love the week before. But I tell you, the CVS is just sitting on a cliff here. Trusted just under $52 a couple times and can't get away from that area. So keep an eye on CVS. If you take out that 51.77 here, that's a major low, and now you're only sitting 50 cents and off.
It's actually trading up this morning, CVS, just to know, because it went ex-dividend.
Ex-dividend. So okay, thank you.
52.13 is the close, so it is trading up with the other healthcare stocks as well here this morning. A little life here this morning for some of these stocks. Maybe it's because of Barron's, but there is a little bit of life going on. But it seems like every time these things have a little bit of life. We saw it on the UNH report. It looked okay. We talked about it on the show that day. These stocks were out of favor. I love selling, the spikes on stocks that are out of favor. Now it's come so far, but I think you get back to the 230s on UNH, probably sellers again. So it's hard to really get bullish these stocks when these, when they keep getting hit every time they have good news. The sellers come in, 2 days later they're down. So
it did go up off a good.
Try to call the bottom.
Yeah, and it did go up off a good report. So
it was good numbers, and they hit it immediately. They by 10 o'clock that day, half an hour after because after hours is trading up, and pre-market was trading up on the good numbers, and within by 10:30 in the regular session, it was already trading the red, and then just kept leaking. Like it was 238, 240 in the pre-market that day when we were talking about it. It opened at the highs, straight down, and we're talking UNH, and then the next day was straight down again. Now it shows a little bit of life here. Dead cat bounce is all I would call that. And, does this mean all of a sudden, this is the time to jump in? I don't know. It might be, but it also might not be. And these stocks trends are not your friend here.
224.24. That was your low on Wednesday. 23 even was your high on Thursday. So that's the area of interest. You get above there, things open up to 238. Your close on earnings day after that big pop, when all said and done, was 220.96. And then I don't know if they hit some stops or what when they took it down to 208.07. But here, just right back at that area where it traded on earnings day. Above 224.24, I don't think I'd want to be short this thing. Not a lot of room up to 238.01. And unless you just got people that picked it up on the cheap there, 216, 215, 214, they're just trying to flip it out for a small play, a small swing trade. They could care less if this goes to 250 or 150. But short-term resistance, 224.24. Dennis, we're a minute past imbalances. Anything notable?
The banks, I'm seeing a little bit, and I haven't really looked at the TLT this morning. It's kind of trading down slightly, which is sometimes good for the banks, but it's it's down just a little bit here. Overall market probably bringing it down, but I do see some weakness in the banks here this morning. Bank of America, 253,000 to sell. It's trading down 15 cents in the pre-market. I see JP Morgan with 33,000 to sell. So see Morgan Stanley, 32,000 to sell, and Wells Fargo, 59,000 to sell. That might change because the TLT is working in its favor with it being down, but as of right now, seeing a little bit of pre-market weakness there. GE every day, sell and bounce, 145,000 to sell. CVS, 103,000 to buy. So that is of note. The CVS is still interesting. I said this a little while ago on the show. You got some lows to lean on here. I mean, if you want to be a hero and say this is the low, you're getting it real close. I would go the March low, 51.93. The April, going back to the April 2nd low, 51.77.
Yep.
Then just a couple days ago, 52. Call the whole area like 51.5. And if you think, that there's value here and you think it's going to turn it around, maybe you buy it and then you throw your stop at 51.5. You give yourself 80 cents. It's a low risk trade if you're going to stop out. I mean, overnight, anything can happen. So it's always a little bit risky, but if you're trading these things intraday, I think if you're trying it and it's showing a little bit of life, and we have seen some buy imbalances coming in this lately, so there is some institutions that are saying, I want to own CVS. I'd stop out below, like maybe give yourself more room, 51. It depends on your, obviously, time frame. I'm a little bit more of a scalper, so I like a little tighter stop, but it's trying to show life, CVS.
Right, and you also get the potential scenario where they flush out the buyers, everyone that's sitting at those areas, take it down to 50-50, a possible scenario here.
And then it gets back up over it. That's how
right.
Jeremy Newsom plays it, and that's sometimes the better way to play it. Let it flush them out first, hit me on the stop if I'm doing it ahead of time, and then it comes back up over it, and that's when you buy it. That's when he strikes. That's kind of a better way to play it.
All right, real quick, before we get to our guest today, let's do KMB earnings real fast.
I knew you were going to say that. I was going to mention that too. All right, good job, Spencer.
Kimberly-Clark reporting this morning, Q1 EPS, as I pulled the chart up here, $1.66 versus $1.55 estimate. Sales $4.63 versus $4.53 billion. So EPS and sales beats for Kimberly-Clark in the first quarter. Let's see, did they give any guidance? Does not look like it that I'm seeing. So just the earnings there.
All right, I'm going to go look to the book. Joel's going to give you some levels.
It's on the fade. The fade is here.
Already coming in. What's the pre-market high?
131 even.
What are people doing? I mean, this is a consumer product stock, and they're going to buy it up $8. I guess I think maybe it's going to pull a Disney or something here, but that would be so out of the realm of normal for this stock to open up $8 on earnings. In my opinion.
I see a monthly high at 130. You're $2.50 away from that. And then, things open up after that. I mentioned the pre-market high, but you kind of got a little bit of a fade going. I don't know. Is there enough stock in the book here to cap
It's only trade 18,000 shares.
Yeah.
The answer is yes, there's enough stock in the book. If this thing doesn't start trading some stock, and I mean in a hurry, you can see this thing come in a lot more. And I mean, we're just talking bearish on it right now, just slightly here, and it's starting to get hit. But I mean, 18,000 shares only traded. I can see in the book 20,000 at 124.90, another 23,000 at 125. That's $2.50 down from where it currently is. There's 50,000 shares basically to go there. So it needs to trade some stock, Joel, to get up here. And maybe it's maybe the buyers are going to come in. Like, I'm not saying it's going to open up below 125, but right now, if it doesn't start trading some more stock up here, you have the potential that this thing could be under 125.
Yeah,
so I don't like the book pressure from looking at, the what's there and sitting on the book. This needs to trade some more stock. So people buying at 130, 131, I'm sorry, I think I have bad news for you here. A regular session, anything can happen. We saw the crazy move with Disney, but Disney had volume. This doesn't have volume, and that's the whole key when you're looking at stuff trading. It's trading 18,000 shares on a report. It's not that much volume, and the book will hold this down. So I'd be scared owning this at 127 right now. Even we'll see what happens. Maybe the buyers come in, and all we need to do is pick it up and start going, 50, 60, 80,000 shares, trade in the pre-market, and you're probably open over 125, 126, and then it does open up. So I shouldn't say I don't see a lot at 126. I don't see a lot at 127. I see some more size, 18,000 shares up at 130, but we got some work to do to get over 125 when the stock opens up. So you need to trade some more shares for this thing to really open a lot higher, and it might do that. But just caution to the buyer up here that there is some stuff in the book that could hold down that opening price.
All right, 8:36 here. Let's take our break and grab today's guest, Andrew Horowitz. He is the president and founder of Horowitz and Company. We'll be right back in a moment with Andrew. All right, and as promised, we are live with Andrew Horowitz from Horowitz and Company. Andrew, how's it going this morning?
Great. Happy Monday to you.
Yeah, thanks for joining us, Andrew. Market sentiment, Thursday's rally. It seems like it's so long ago as we cover all the earnings and all the movements here, but so far, early into earnings season, give us your overview.
Yeah, it's a good question because so far earnings season seems to be living up to the very, kind of unexciting expectations where we're going to see year-over-year growth that's kind of tepid. It's okay. It meets some decent criteria that we're at least not falling off a cliff. However, we're in, I guess, a position where just average or below average, C-graded earnings season is going to be just good enough. And everybody is in this hope trade right now that started with the Fed pivot back in December, January. So earnings right now, I think we're on the cusp right now, today, of seeing really what is going to happen and how investors can really put up with just average earnings. So I'm really not too excited about the prospect if some of the numbers this week start to disappoint, because I do question how much of a beating investors will be willing to take, at the same time keep throwing their money after some of these stocks.
And you mentioned a component of this earnings season, margin compression here. A lot, at times they give the good number, the good earnings, the revenue beat, and then, they come out and they talk about margins and margins compression. Have you seen that in any of the reports so far?
There's been discussion about higher prices as a concern. Of course, we see that the trade sanctions, the trade war, we see that even though we don't have necessarily outright inflation, you do see PPI starting to pop up. And even with the dollar higher, it's been a concern that there has been some price hikes and lower ability to meet the margins. As a matter of fact, one of the things that we do on a regular basis is we screen for stocks with a margin that's expanding. And I'll just tell you that over the last couple of quarters, one of the things that has really taken us down in the number of stocks that we're seeing that meet this particular screen that we run is that margins are not growing. We're starting to see a little bit of reversal there.
All right. And do you have any kind of precedents? How long have you been following your screeners when you see this kind of, inclusion of less and less stocks, whatever the reason is? Do you have any, historical, precedents for what follows after?
I will tell you that when we go from, let's say, screening about 5,000 stocks, we use this for one of our portfolio strategies. And when we see that we're screening for about 5,000, get down to, let's say, 60 and then 50. Okay, in that kind of range, that's the normal market conditions that you see. When I start seeing it get towards, let's say, 35 or 40, and right now we just ran it and we have, I'm just looking, 44 securities that came through the list. And this is usually a time when we find that stocks are unable to keep pace with margin expansion, earnings growth, revenue growth, high ROE. There's a whole bunch of other things. But usually what happens is I have found about a quarter after that is when markets get a little bit shaky, or with, again, not exactly a quarter, but somewhere something's going on behind the scenes that's showing me that things are not as healthy as maybe markets consider.
Andrew, can you give us some names on that list?
I can. Let's see. On the list currently, we have Amazon just came on, Auto Home, Boeing. Interestingly enough, Hold on. Scratch that. New list. Well, Amazon's still on there. Hold on. Got to go over the newer list. Cabot Oil and Gas, Costco Wholesale. What else we got on here? Fortinet, Turtle Beach Group, Intuit, Kemet, Twitter, actually, which is fascinating. I don't think I've ever seen Twitter on my list before, but it made it. Visa and U.S. Steel made it, which I find amazing. Because I mean, if you look at that stock, if you look at the stock chart, you're like, no, I'm not getting near that. But they seem to be some of the stocks that are making this particular screen.
And
Interesting. Go ahead.
Just to recap, this is a screen showing margin compression.
No, this is a screen showing stocks that are actually able to make have margin expansion.
Okay.
Are able to have earnings growth, are able to have revenue growth, and probably 5 or 6 different other items on there. But these are the stocks that are making it. We're going from about 65 to 70. Actually, at the beginning of the year, there was about 70 securities on there. Mid part of the quarter, about 60 something. Now there's only 44.
Okay, so if you're not, you said you're not super excited one way or the other about this earnings season. So what is going to be the next big catalyst for you going forward?
I think that we've priced in already the resolution of some kind of China deal, of something going on here. I'd like to see the dollar start to come down a little bit here, and I'd like to see that there is, the Fed saying that things are getting a little bit better. I mean, there's, I guess the catalyst would have to be the trade sanctions being lifted, and I'd like to see that, we see a little bit more of a stabilization of earnings moving forward, rather than just being a rally built on the Fed's largesse of keeping rates low.
Interesting. Probably should have did this at the top of the interview here. I was reading some of your literature, and you were talking about is investing more art than science, or success in the market something else altogether? I guess there's a lot of different angles you can approach that from the science end. Here we are in the world of high frequency and quantitative trading here, and then you discuss it being an art. Give us your perspective on that comment or that article.
So we every quarter I put out something for our clients, and we send it out to others. And one of the things I was kind of scratching my head about this quarter was, what's really the success rate of individuals, and where do people look to find the opportunities to invest? Is it the whole idea of art, where we're dealing with market timing and behavioral finance, or science, where there's technical analysis and fundamental? And I started thinking, these days there's another component that I think a lot of people are missing. And that's called market mechanics. This whole idea that, we have things that are automated, absolutely systematic, on a systematic basis, continuing. For example, we have algos that are looking at technical analysis, and they're like just firing off trades when a stock hits, let's say, the 50, the 100, the 200-day moving average. Much different than where you would look at it before, like, okay, the 50-day moving average, that's an interesting buy point, support point for institutions. Well, they're programming their algos now to just fire that off. Then you have buybacks in the market. Just regardless of the price, regardless of what's going on with the market, regardless of sentiment, that we're just seeing buybacks hit. And basically, until the buyback is exhausted, regardless of anything else, as long as it's done within the time allotted for that buyback, it's being done. So that's keeping the markets up. And then you have things like 401k deposits. The more people we have in the workforce, the more people are doing a payroll deduction out of their paychecks into their 401k plan or pension plan, and the larger the pension base grows. And this is all being done by ETFs and automated investing. And I think this whole market mechanics is a big part of what we're seeing. And you can see the footprints of this in the market on a regular basis, this kind of slow plod higher during the day. And then the certain stocks in particular that are able to be magically levitated on a regular basis because they're just either buybacks going on or they're buying it because they know how this impacts the indices on a market cap basis. And they're buying those stocks to hold the indices up so that they can sell out underneath and maybe hedge with some options or futures underneath the rest of it. Well, so there's a whole component of market mechanics going on right now.
Andrew, I agree with you here on the market mechanics behind this. And Dennis Dick here from Bright Trading. And, I can tell you, our traders trade this stuff. I mean, we look at and we talk about this, looking under the hood in the ETFs and seeing what's moving. And you'll see some days where some tech stocks are just so strong that the Qs aren't up enough for it. And it's like, okay, well, they have to sell the non-component tech components of the Qs to make up for this. So you'll see stocks that, are like Starbucks, Kraft, Heinz that are in the Qs, and people don't realize, that there's about 22 stocks that are in the Qs that are not tech stocks. And you'll see these stocks get hit just for the simple reason that other stocks are up too much. The ETF impacts on this market are a lot more than most people think. And it's basically a lot of arbitrage that's just going on, and it's just simple, and that's what causes the rotation to be even more pronounced sometimes, because when you've got the certain ETFs, and a lot of them are the same. I mean, when you look at you see more ETFs launched all the time, and they're always buying the same stocks. It keeps an artificial bid. I agree underneath a lot of these stocks because as people just continue to buy certain ETFs, they're going to keep buying these same stocks. So
I agree, feeding on itself, right?
Yeah, it is. So it's very interesting, it's a very interesting something, that a lot of people don't talk about because most people don't understand it. But, is there a possibility for, sitting back and doing old school analysis that maybe some stocks get sold off, or get bought maybe too high in the case if you want to short stocks, just because of this long-term arbitrage that's going on? Is there a disconnect between sometimes, company fundamentals now and the stock prices themselves?
Oh, of course. I mean, there's a tremendous disconnect right now where we're hitting all-time highs, and we're seeing that valuations are getting not as high as they were before, with the underlying story of earnings and earnings growth and potential outlook not being anywhere near it. There's a big disconnect. You have to add in the whole idea there's a market sentiment issue going on right now, but it's so easy to pop money into, as you said, into an ETF or out of an ETF. Take mutual funds out of the equation, where you can just basically just buy a block of 500 stocks or 100 stocks with just a push of a button, and everything from that point is elevated. You're buying everything. So there is a major disconnect in that. The question is, when does that separate? And I think in November, December, we saw some of that happening. The lack of liquidity in the market, because there's not as much individual stock trading, amazing amount of buybacks that retired a huge amount of stocks, shares in the market. And then on top of it, now you have this block trading going on with ETFs, could cause significant volatility in times of low liquidity.
One more question for you, Andrew, here. Boy, just a rush of IPOs here. Lyft, Pinterest, Zoom, anything in that? I mean, kind of symptomatic of a frothy market here as far as IPOs, and then also those IPOs, any of them on your buy or sell radar?
I mean, IPOs are tough on the buy, or they don't have a lot of really good public-based time where we can see the earnings. So you got to kind of let it sit. I mean, there is an interesting process that I've seen where, if we see IPOs dip, and it's a technical pattern, we see IPOs dip down below their IPO price, hopefully consolidate for some period of time, then come back over, test that IPO price, and then move above it. There's an interesting buy pattern there. Lyft was terrible from the beginning. Uber, we'll see what happens. Hopefully they'll price it better. Zoom and Pinterest, I mean, Zoom is interesting, definitely an alternative to some of the other video conferencing and video. I think you use Zoom.
Yes, we do.
Right. And but I think that Pinterest lukewarm on this, but it is. I think all these IPOs, something was $700 or $800 billion of IPOs coming out in the near future. I do find that to be one more checkbox in the overheated market condition and too highly a sentiment that's probably too high if we keep on bidding these up like we've seen it. So that's just another small component, something I look at. The one thing that you do want to look at is the Citibank Economic Surprise Index right now. I think this, as a side note, I think there's something to be said about that, where we're hitting 2017 lows, where economic numbers that are coming out, which don't necessarily always run markets where the economics are. But again, there's so much disparity in reality versus where markets are, and that disconnect, as Dennis had mentioned, it's something to at least look into.
Going back to those IPOs, the Zoom IPO priced at 36 and opened at 65. So I mean, just in those couple of hours there, somehow it nearly doubled. I don't know how that happened, but it did. Nonetheless, Andrew Horowitz is the president of Horowitz and Company. Andrew, thanks for the time, and have a good rest of the day.
Thanks, guys. Keep up the great work.
All right.
Good stuff.
All right. 8:51 here, guys. Joel, any word here?
Drifted lower.
Yeah, their balance again bigger, Joel. So and we like to look under the hood. That's what, we should almost change the show to looking under the hood sometimes, because I think that's really what you need to do, because so many people just trade the S&Ps off technical stuff, and they're looking at charts and they're saying, okay, well, this is going to happen, this is going to happen. There's certain times of the day where there's more information available to you than a chart. And when you look at these imbalances, they're littered with sells across the board. This isn't coming back unless there's some news that comes, or these sell imbalances flip all to buy in a hurry. I don't see us, just bouncing and, opening in the green here in the next 40 minutes. And obviously new information comes and things can change, but IBM's got 100,000 to sell. That's the biggest IBM sell balance I've seen in a long time. That's going to be significant. The banks are still selling balances despite the TLT being down. You've got stocks like Walmart with 50,000 to sell. I don't know why. I don't know who's selling it this morning. Usually Walmart often will rally on a day like this, but not this morning. I'm seeing MO 49,000 to sell, PM 38,000 to sell. So you're seeing selling imbalances, even some defensive. Nike 70,000 to sell. I'm just looking and just giving you some different numbers, but I'm not really seeing a lot of buy imbalances. I do see one in Ford, 273,000 to buy in Ford. That kind of stands out as an anomaly, but they're mostly selling balances here in the morning. So that would indicate that I'm not surprised that we are continuing to drift lower. And if they continue to grow, we're probably going to continue to drift even more lower.
Anything in Boeing?
Let's go check it out. Boeing, 14,000 to sell. Significant for a $375 stock. It's down $5, so there is some headlines. It seems like there's headlines continuously on Boeing, but I mean, it's 14,000 to sell, so it's going to have some early morning weakness. Now, everything changes. This information is obviously valid till 9:30 when the stock's open. But I mean, you're trying to get a feel for, okay, where are we opening? We're going to open a week, or we're going to continue to drift before the open. I'm telling you, prior to the open, after 9:30, we don't know. New information comes in. Maybe buyers emerge. There could be some different things that happen. But as of right now, we're looking fairly weak here at the open because we've got a lot of sell balances.
Let's go to more earnings here. We got a couple more. Let's do Steel Dynamics real fast. STLD, Q1 EPS 91 cents versus 98 cent estimate sales, so 2.81 versus $2.83 billion. So a miss on both EPS and sales for STLD.
Stock trading slightly down, but you could just say it's traded 6,000 shares. So, how much price discovery is really in here yet? Not that much. So, I'll just say, with that U.S. steel chart, as weak as it is, Nucor started to roll over. AK Steel, another one that's been rolling over here. I mean, it's hard to really get excited, even if this thing goes up. It's hard to get excited in going and buying a steel stock because they're out of favor right now. So I always say, I think sentiment sometimes can trump everything. And if you got a spike on this to 35, 36, there's sellers all over the place. If this starts leaking, there's not buyers below. So it sets up, even going into the print, it probably set up better from the short side just because it's been so weak. But Joel, what are your thoughts here?
Got to get off the gate. You got to get right off this 33.40 area.
Yeah.
33.32 was your low on Thursday. Multiple highs at the 33.50 or multiple lows at that area. 33.67, 58, 52, 53. There's your area. Got to get away from there. Only trading 20 cents above that. To me, this just looks like it's just leaning heavy on the support here, kind of out of favor. Sit with the U.S. steel, and you got a nice drop there if you're looking for a scalp here. Parallels at 33 to keep an eye on, and then you drop to 32.5. So for this one, got to get away from this area in a heartbeat. Also, the close is not too far away. 33.96, 3 closes at the $34 area. So there you have it set up, 33.5 to 34, your early range. I just doubt you can sneak above 34.
Jump over back to just a few other stocks that were in the news here. We saw some big moves here. Well, actually, where do you want to take? I was going to go back to Barron's. I have Spotify. We didn't talk that. Do you want to talk?
Yeah, we can
that
do
was
that.
On the cover.
Yeah, I was going to do Boeing, but we can do Spotify too. Spotify you mentioned on the cover of Barron's for the weekend.
And not in a good way.
Not in a good way. They said it could become. Wait. Let me see here. Let me find out what they said. The headline was that it's a risky business. So.
Yeah, it talked about the podcast. I skimmed through the article. It was a long one, and just overall, just bearish, just doubting ways that it can transform the music industry, which has been around for a long time. To me, I'm looking at it set up technically. Just a wall at 140 here. Your last 3 highs surrounding the 140 area, so that would be your resistance. Currently trading at 138, and then it's just been kind of a consolidation station here. 134.76 has been the low of that consolidation. So there's your early range. I see the resistance, support in this. 132.97 is a low, and 131.78 are some other lows here. So quiet, pull back off the high. Not sure if Barron's is going to have a major effect. It is now. Let's see if we can hold the pre-market low.
And ratings here, we mentioned the Tesla one already. There's not a lot of big ones, but there's a few. Spencer, just give us a few highlights here, because there is Dow Chemical. I noticed Lam Research. Give us a few highlights.
Yeah, all right. Lam Research getting an upgrade this morning from B. Riley from neutral to buy. Pull up my thing here. We've got Rent-A-Center upgraded at Raymond James from outperform to
has it?
Yeah.
Outperform to strong buy. I guess that's their highest rating. Strong buy on Rent-A-Center. What else did I have here? Nothing. Oh, Canopy Growth. This is not too covered a stock. CGC catching an upgrade from GMP Securities from a hold to buy there. What else do we have? Any downgrades? Yeah, we mentioned the Tesla one already.
Dow Chemical, I saw.
Who upgraded that?
I think they got downgraded. Let me just go check. Maybe I got it wrong, but I thought I saw Jeffries.
It's possible.
Maybe it's a price target. I had it written down actually.
DR Horton downgraded.
Oh no, sorry, that's a maintain.
Okay.
That's strike that. That wasn't a downgrade.
That's what I'm thinking.
Jeffries.
DR Horton DHI downgraded from Keefe, outperformed to neutral. Only downgrade to sell I'm seeing is Citigroup downgrading GrafTech EAF to sell today. Actually, there are a couple smaller ones, but Tesla at Evercore is the big one this morning as far as downgrades, and as far as upgrades, the biggest that I'm seeing are the Rent-A-Center upgrade from Raymond James and the Lam Research upgrade from B. Riley.
Ed Parker's asking us about CMG. Interesting. What a pin, eh? So you look at, right on the kisser there from Thursday expiration, right on 700. So, and there was some open interest there. So market makers doing their job perfectly, pinned at $700 for the CMG. So obviously that opens up here now. So I would expect, you see, and a lot of times we don't talk about this, but you'll see, the options hold a price to a certain, and then have the moves out once those options go off the board on the Monday. So we'll see if we get some movement here in CMG. I'm not sure the direction. I kind of feel like the chart's broken a little bit here, but again, you could also argue that you got a double bottom in place too at 687, 680, 650. So at 700, you're kind of in the middle of nowhere. So I don't know. Difficult to make a hot call on this one.
I think it got a little analyst love on Thursday, and that was the reason for the pop up to 700. Two highs right there at 700, trading a little bit weak. I think for this one, you want to see it get back and close back over 700 and challenge that close at 706.48, and then a pair of closes at 712.5. But I mean, unless there's like bad news or a big market meltdown here, it just seems like we're just hanging in here at 700 in absent of bad news or anything. It's just probably going to drift here between those parallels, 686.5, 687, up to the high of the move, which comes in actually on Wednesday. It's it was farther back, 721.21. That was your high on April 9th.
All right, that'll do it for today's show. Before we go, I want to remind you all about the Benzinga Trading Summit. It is June 20th in New York City. Dennis, Joel, and myself will be there doing the show live. Dennis and Joel will also be doing a presentation about their trading strategies. If you want to learn more, go to benzingatradingsummit.com. And if you enter the promo code PMP15, as in PreMarket Prep 15, PMP 15, you will get a 15% discount off any ticket, including access to the exclusive trading lounge. So again, benzingatradingsummit.com, PMP 15 is your promo code. Thanks to our guest today, Andrew Horowitz. Thanks to all of you in our chat. Please remember that all the information on our show is for informational purposes only and not meant to be investing advice. And on that note,
HC getting a new CEO right now. So Spencer, thanks. I see it there too. Name's Miguel Patricio, CEO. So KHC, you are seeing a lift in it. I mean, they want some love. Obviously, they want some changes there. Stock's been in the gutter. It's getting that there this morning. It's getting a little bit of a lift here, showing a little bit of life. KHC 33.75.
All right, good call there. On that note, everyone have a good rest of your day, and we'll see you on Tuesday.